Okay.
Ani, welcome to the Chippewas of Nawash Unceded First Nation Fiscal 21-22 financial presentation. My name is Paul Fraser and I'm your Finance Manager. With me today is Akash Arya. He is our partner at our audit firm MNP, and he will be taking us through the financial presentation today. Before we get to that, I'd like to spend just a few minutes explain to you the status of our remaining audits, how we got behind, and what we're doing to get caught up. So, why has there been a delay in filing? Well, COVID, number one. When COVID hit March 2020 through at least 2022, there were no audits being done out in the field. And so our audits just didn't get done, period. And when it came time to start to catch up on our audits, we didn't have the staffing to catch up on the audits and do the day-to-day accounting function as well. And in addition to that, the finance department in 2023 was tasked with the implementation of ADP, our new payroll system. So we just didn't have the staff to get the job done. And because of that, there was a lack of audit preparation. If we don't have the staff to do it, it doesn't get done. And so that slows down the audit process as well. It makes it difficult to set up audit time with our auditors. And with that setup of the audits, we really can't schedule any audits in January to April because our auditors, like all auditors, have a majority of their customer or clients are calendar year ends. So their audits are in January to March, April sort of thing. And also there is the tax season, first quarter of the new year. And then finally, our accounting process is manual, paper-based. It takes a long time to get anything done. So what are we doing to correct this? What have we done to correct it, I should say? We replaced our departed staff. Kathy McElrick was here for 10 plus years. She was our accountant and she left in August. We rehired for her position, senior accountant Rick Baker, and he's been here since October. Now, the thing to understand is with new employees, it takes at least 6 months for them to get their feet on the ground and start to understand stuff. I know that from personal experience. Additionally, we hired one more headcount. That person I think is familiar to all of you, Diana Ross. She has a great experience in our financial accounting process, so she's going to be a big help. And she started in March of this year. And finally, John Ramage, our former finance manager, has been working along with us on 1 day a week to help catch up. And we have moved him to 3 days a week and specifically to work on the audit catch-up only. So those are the staffing adjustments that we've made so far. And it's basically, we're just getting started because Diana started in March. Rick, basically after 6 months, started in March. So we're moving along. Okay, so the next audit, 22-23, a large portion of that preparation has already been done by John. He has the 22-23 and 23-24 deferred revenue calculations done. And that is basically every single one of our projects. We get money from the government. And if we don't spend it that year, then we have to defer it or move it to the next year. And we have something like 100 programs that has to be done manually for each one. Having said that, we still have lots to do. And we are committed to having all our audit prep work done by July 15th. with a target presentation date of November 2025 or earlier. The remaining audits, tentative dates, 23-24, we would like to have completed, presented by March 26th. That may have to move either forward or backwards a couple months because of the issue I mentioned before about scheduling audits in January to April. And then 24-25, July 26, and 25-26, December 26. So that's where we are. Just note that we are not the only band in this situation. In fact, the majority of First Nation are well behind in their audits. So that's the situation we're in, and we're looking forward to getting caught up soon. So with that, I'll turn it over to Akash to take you through the financials. Thank you. The other thing I'd like to mention too, I'm sorry, if you have any questions, just email me at financemanager@nawash.ca, and we'll try to get the answers to you. Okay, thank you very much.
Thank you, Paul. Appreciate the background there. So for those of you that don't know me, my name is Akash Arya. I'm a partner at MNP. I'll be presenting today the consolidated audit results for March 31st, 2022. Just to give you a bit of background on myself, I've been with MNP for 15 years, providing audit and accounting services to clients across various niches with a focus in our Indigenous services group, as well as not-for-profits, trusts, and other public sector organizations such as municipalities. So I'll start with going through an agenda. And what we're going to discuss today is the management responsibility. So what management's responsible for, chief and counsel's responsibility, auditor responsibility, then the audit opinion, and the financial results for the March 31st, 2022 fiscal year end. So looking at management responsibility, management is responsible for the financial statements and presenting and preparing the financial statements in accordance with Canadian public sector accounting standards. Management is also responsible for designing and maintaining accounting systems and internal controls to ensure transactions are authorized, assets are safeguarded, and to properly maintain financial records. Chief and counsel is responsible for overseeing management's financial reporting responsibilities, so reviewing financial information and discussing relevant matters with management and the external auditors. Chief and counsel's responsible for approving the consolidated financial statements, and then also appointing the external auditor, which gives full and free access to information. So then you might ask, what are our responsibilities as auditors? So our responsibility as auditors is to express an opinion on the consolidated financial statements. We're required to follow generally accepted auditing standards, so we comply with ethical standards and properly plan and perform the audit. We assess risk areas, we assess internal controls, and then we examine on a test basis. So as auditors, we have 4 options for opinions that we can provide on the audit report, which include an unqualified or clean audit opinion, which is the best audit opinion as auditors that we can offer. A qualified opinion, so it's not bad, but it's not great. A denial of opinion, and then an adverse opinion. So for the March 31st, 2022 fiscal year, we are issuing an unqualified or clean audit opinion, which is the best opinion that we can offer. So in our opinion, the accompanying consolidated financial statements present fairly in all material respects. the consolidated financial position of the First Nation as at March 31st, 2022, and the results of its consolidated operations, changes in net financial assets, and its consolidated cash flows for the year then ended, in accordance with Canadian public sector accounting standards. So some key highlights for the year: strong financial results. Annual surplus for the year was $7,396,426. And if you compare that to 2021, the surplus was $2,464,524. With that, there's an increase in accumulated surplus year to year. And then just to comment on the financial statement reporting entity, the reporting entity is everything controlled by the First Nation, which includes Revenue Fund, Board of Education, Capital Housing Program, and then SON FC, which 50% is consolidated into the audit. So now going through the financial results, starting with the consolidated statement of financial position, we'll see assets on the books. So these are things that the First Nation owns or has owing to the First Nation. So for 2022, the total assets were $139,628,411. The total assets are comprised of cash and cash equivalents, which make up 30.4% of that balance. Tangible capital assets, which make up 26.5% of the balance. Portfolio investments, which make up 25.8%. Accounts receivable, which make up 16%, and then other smaller items. So looking at this in a different format for total assets, we can see that there was a substantial increase in cash year over year. And we'll also see that there is an increase in tangible capital assets year over year. Portfolio investments remained relatively consistent. And then there is an increase in accounts receivable as well during the year. And the increase in accounts receivable is due to the timing of transactions, with most of the increase relating to Indigenous Services Canada funding received after year-end for a water treatment plan, roads, bridges, housing project, and fiber optic cable lines, which was collected subsequent to the end of the year. Looking at tangible capital assets in a little bit more detail, just comparing 2022 and 2021, we'll see that these assets are comprised of predominantly buildings and improvements, and then infrastructure. So looking at liabilities, these are things that the First Nation owes and has deferred to future years. So total liabilities for 2022 was $77,907,695. So total liabilities is predominantly comprised of deferred revenue, which makes up 56.9% of the balance, long-term debt, which makes up 39.3% of the balance, and then accounts payable and accruals, which makes up 3.6% of the balance. So looking at liabilities in a different format, comparing current year versus prior year again, we'll see that there was a large increase in deferred revenue year over year. And this is revenue that's received by the First Nation that is attributable to a future year. So the majority of the increase is a result of funds received from Indigenous Services Canada, as I had mentioned, for the water treatment capital project, which happened subsequent to year end. We'll also see that long-term debt year over year has decreased. So most of the long-term debt relates to the SON FC investment for a high voltage electric electrical transmission tower line, and the decrease in the balance just relates to repayments of the debt during the year. Okay. So looking at accumulated surplus, this is everything that the First Nation owns, less what the First Nation owes, so all assets minus all liabilities. And for 2022, that amount was $61,720,716. And then there's a breakout in the chart here that shows the various areas where the surplus has been utilized. Attached to the presentation, just for reference, is a more detailed statement of financial position. I have already went through these balances, so it's just for additional reading and additional information. Okay, so looking at the consolidated statement of operations, we'll start with revenue. So revenue includes all monies received by the First Nation, including government funding, both federal and provincial, and then own source revenue. So we'll see in this chart here, Indigenous Services Canada comprised 71.3% of total revenue. Other federal funding, 10.3%, provincial government funding, 8.5%, and then the SONFC investment income, 6%. So looking at revenue, comparing 2022 versus 2021, and looking at this in a different format, we'll see that Indigenous Services Canada increased substantially during the year. And there's a larger portion of prior year deferred revenue coming into income during the current year. The largest individual revenue sources by funder, as mentioned, are Indigenous Services Canada at 71%, and then the Ministry of Children, Community, and Social Services comprises 4% of the revenue. Looking at expenditures by object, these are all costs of the First Nations programs and operations. So for 2022, this balance was $22,792,871. And this is comprised of salaries and benefits, which are the largest expense for the nation at 34%. There's other expenditures, 31%. Material supplies of contracts, 16%. Interest on long-term debt, 5%. Post-secondary support, 6%. And then various other smaller balances. So looking at expenditures by object, just comparing 2022 versus 2021 in a graph format, just for additional information. Overall expenditures year over year remained relatively consistent, with several changes in the various categories. Looking at expenditures by type, this is just another way to look at the expenditures that were previously presented. But what we'll see is that education by type makes up 19% of the expenditures. The band government, 17%, community services, 13%, health, 10%, and then various other areas. Okay, so looking at expenditures by type, again, comparing 2022 versus 2021, we'll see the various increases and decreases across the different categories here. And I just wanted to say thank you for your time and allowing me to present the March 31st, 2022 year end. If you do have any questions relating to the fiscal year audit, please direct them to Paul Fraser, and we can connect and answer any questions that are necessary. Thank you.